Imagine this. You close on your perfect home, the one that checks all the boxes, only for its value to cut in half overnight. It's a topic that's on everyone's lips. From coffee shops to my client meetings, everyone's preparing for a crash. But are you really ready to snag a deal if the market crashes? Today we're gonna look at past real estate crashes, how they compare to today's real estate market, and how you can prepare yourself for a potential market shakeup. Now, when we fast forward to 2008, the most recent crash that most of us remember, the crash where some of us have family members who endured it, have friends who have endured it, and who still haven't recovered from it. We see similar trends that were happening in the 20s and in the 80s. We see credit being given out easily during 2008. We see subprime lending, loose lending practices. Anyone with a pulse, a social security number, was getting a mortgage. And what this did was the mortgage-backed securities just couldn't hold. People were not paying their mortgages, and we ended up having a big real estate crash that a lot of us felt and that we were barely recovering from in 2020 during the pandemic era. Now, I bring up 2020 because that's what's setting the stage for 2024 and the real estate market that we're currently in. We have to reflect back on what's been happening over the last several years to see what's coming in the future and if we're going to have a crash and how we can prepare for it. Now, there's a lot of similarities that occurred during the last recent crashes in the 20s, 80s, and the 2000s. But there's also stuff that isn't happening. We're not seeing subprime lending. Lending practices are more strict because of the government regulations that have been put into place from the errors that were made in those past crashes. So I think lending is safe right now. And so the Federal Reserve is trying to avoid an economical disaster, and they're fluctuating the interest rates to try to bring down inflation. So we're seeing these sky high prices. We've pretty much reached the top. And are we gonna burst? Well, government policy is giving out a lot of free money still. If we look back to 2023 in March, we saw some more banks that were too big to fail get bailed out. The Silicon Valley Bank and Signature Bank, they went down. And what did the government do? They gave them money to bail themselves out. And now we look at the stipends that were given out, which rose inflation. I'm sure it did help people, but I've ran across people who really shouldn't have used it, and they did. So government policy is being more lax with the money, has kind of created this inflation that's happening, and now they're trying to combat it by raising interest rates, and it's affecting the real estate market. So it's pretty evident that we're treading through familiar water, maybe in a different location, because like I said, there's no more subprime lending. People just can't get mortgages as easily as they used to in 2008. However, we're seeing these high fluctuating interest rates, which is a sign of a crash. We're seeing these high overvalued real estate prices, which is a sign of a crash. And we're seeing the economy just not doing well because of the government policies that have been put into place, which has been a sign of a crash. So what do we do? How do we prepare? What's the next move? If you're planning on buying, if there's a market crash, it's not gonna happen gradually. It's gonna be fast. A day or two, everyone's gonna be running for the bank. Now, if you're a buyer who's waiting for the market to crash, you have really one option as I see it. You have to have the cash on standby to buy those properties as their value depreciates. Because if there's a market crash, banks are gonna really halt and really get tight on lending practices, even more strict than they are right now. So you might be able to qualify for a loan currently, but when there's a crash, there's gonna be quick policies to cut their losses. They don't want you to buy a home that's valued at $1 million only for the next day it be valued at $600,000. That's a loss for them. They're not really looking out for you. Your best bet is to have the cash ready to buy that house. Now, most people aren't gonna have the cash to straight up buy a house. They're just not. It's a lot of money for the normal American to have to buy a house full cash, especially in San Diego or these cities that are very, very high in value, that are cities of destination that people want to live in. So buy now, because if you're buying now, you go in with the mindset of long-term. The real estate market has notoriously came back to what it's at levels equal to or surpassed before crashes. So if you plan on buying a house to live there with you and your family, it's a great time to buy before a crash because you'll recoup that money in the long game. Now, if you plan to buy as an investor, that's where it gets scary because you're basing your assessment off the value of the property it currently is and is projected to be in. Now, if you have an after repair value of $1 million when you buy a house to be able to rehab it, remodel it, and flip it or rent it out, your numbers aren't gonna make sense after a crash. You're gonna be one of the sellers who is trying to get rid of their property rather quickly to avoid losses. Now, if you're a seller, you have two options. You sell quick, you sell fast, you try to beat it to the bottom, but you have to understand you're gonna lose money. It's just how much do you wanna lose? Now, the better option, I believe, is just hold on to it, especially if you locked in at those low interest rates, those 2s, 3s, 4s, 5s. It's essentially free money. Get that place rented out, find a way to keep making your mortgage payments, and just play the long game. Because notoriously, real estate comes back and goes higher than it was before. So if you're selling, two options: get out quick or just hold on and coast and wait for it to come back. So let's face it, we are in familiar waters as previous real estate crashes. No one has a crystal ball. No one knows when the market or if the market's gonna bust. However, there is indicating signs that we've reached our limit, and how you're planning for it is really important. Real estate has ups and downs, ebbs and flows. That's the name of the game. If you understand that part of real estate and you go into it with that type of mindset, you'll be able to make it through those storms of a crash. If you're in it for quick money, if you're in it for a fix and flip, if you're in it for some other reason than buy and hold long-term, which I think is the best strategy, a crash is gonna really set you back. If you've been preparing for this, if you have cash saved up and you're ready to pounce once that happens, you're in a good position to set yourself up to be a next real estate mogul. So I hope this video opened your eyes a little bit on what's going on in the real estate market. It's not all bad. It never is all bad. It's what you make of the situation. So if you like this video, go ahead and watch this next video. Thank you so much for watching. Have a good one.